Hello, I'm Mary Kurzweil with the CattleFax Closing Bell. Today's Closing Bell is brought to you by Zoetis Beef. Whether you call it bovine respiratory disease, BRD, shipping fever, or cattle pneumonia, it's a problem. Zoetis helps provide BRD solutions and expertise for every stage of cattle production. When an outbreak occurs, Zoetis has a full lineup of antibiotics to get it under control quickly and get your cattle back on feed. Visit brd-solutions.com for the full lineup of antibiotic products and insights from Zoetis. The USDA's August crop production WASDE report was released this week and surprised everyone with the adjustments on the corn production expectations. Going into this report, record large corn production was already expected, with acres up 4.5 million from last year and yield expectations at 181 bushels an acre. In the latest WASDE, both corn acres and yield estimates rose significantly. Corn yield estimates increased by nearly 9 bushels an acre to go to 188.8. While this would be a 9.5 bushel an acre above last year's record high level, strong precipitation and good growing conditions have continued in the major corn production regions, so a higher number was expected. Perhaps the bigger surprise in this report was the increase in corn acreage, up about 2 million planted and harvested acres compared to the July report. These acres were shifted from soybeans to corn, making for the largest July to August shift between the two since 1995. Ultimately, the record large yield and acreage puts corn production expectations at about 16.7 billion bushels, up by about 1.9 billion bushels, or 7% from a year ago. The report did show an increase in corn usage expectations as well, but those were not enough to offset the gains in production. This moves the stocks-to-use expectations up 2.5% from July at 13.3%, nearly 5% above last year at this time. Soybean supply expectations did decrease as yield expectations grew about 1 bushel per acre since July, now at 53.6, but acres declined by more than 2 million. Soybean demand expectations also softened, but stocks-to-use supplies still tightened to 6.7%, about a 0.5% point lower than the July report. While the futures market seemed to already be trading the larger corn supply, this report was bearish, and the active December corn futures closed 13 cents lower on the day the report was released. Since then, it has regained a few cents throughout the week, trading mostly sideways. Larger supplies should keep corn prices relatively low as we look ahead to the new crop year. Soybean futures traded the bullish news, closing 21 cents higher on the day of the report and looking to close over 60 cents higher for the week. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.